Now, 40% of the houses sold in the final 3 months of 2022 were due to landlords making the decision to get out of the market and cease putting their properties up for rent. This is while the Society of Chartered Surveyors remain concerned about the relatively low level of housing commencements and completions. So it begs the question, what's happening in the housing market and what's the implications for the rental market? I'm joined now by Maurice Deverell of the Irish Properties Owners Association, himself a landlord for the past 26 years, and also by John O'Sullivan, Chair of the Society of Chartered Surveyors Ireland's Practice and Policy Committee. And Maurice, I might start with you. There's been an awful lot of discussion about the bureaucracy that landlords face. There's been an awful lot of discussion about the costs that landlords face. But nonetheless, we are at a point where rents are going through the roof, and you would have thought it was a profitable endeavour to be involved in. So why are so many exiting the market?
There's a lot of reasons. Obviously, like you said, it's due to tax, rent control, the eviction ban, the 176 changes to the legislation, and the rising costs. But to answer your question as to considering that rents are high, why are loads leaving? Last month, Ronan Lyons of Daft produced a report, and he looked at an apartment and he gave the yield of the apartment at 5.9%, which I would think was quite generous because he didn't include numerous costs like stamp duty, solicitors and estate agent fees. But looking at it, roughly 6%. If you buy an apartment, roughly a third of it goes on maintenance, a third of it goes on tax, and a third of it comes to the landlord. So therefore, a third of your 5.9%, you get a 1.97% yield. This afternoon, on Raisin Bank Ireland, the rate is 3% less dirt at 33%, which leaves you with 2% net. So if you buy an apartment, you're down 0.1% rather than putting it on deposit. So why would you want to be a landlord? And that is why a lot of landlords are leaving. It is financially not viable.
And those numbers that you're giving, do they factor in the capital gain of the underlying asset, or is that just the rental yield?
No, the Ronan Lyons numbers are just the rental yield. Let's be honest, capital gain, if you owned property in 2007 and had a massive capital loss, you would be a little bit shy of putting capital gain into figures now.
But if you bought property in 2012 or 2014 or 2016, you might be high on the hog.
You might be, but a lot of people didn't because it was harder to get money in those years.
And what do you think is the reason that has catalysed it to occur now? Because a lot of the factors that you describe have been there for the last while.
It's the rent control. Absolutely, without a shadow of a doubt. Look, it's the rent control, it's the tax, it's the eviction ban. Yesterday I was on with ITV in Wales and I quickly looked up Cardiff versus Dublin. And in Cardiff the population is about a third of what it is in Dublin. They have 1,231 units on the equivalent of Daft, while in Dublin we have 552. That means that a tenant in Cardiff has a choice of 6 times the amount of property that we have in Dublin. So it's the rent controls have made a lot of... They don't have rent controls in Cardiff, and that is what's made a lot of landlords pull out. And nervousness. There's no confidence or stability in the property market at present. We have no idea what changes the Minister will make next. The temporary 2015 rent freeze was supposed to be imposed for 2 years, and we're still looking at it 8 years later. If there was a viable yield for landlords, they would stay, but there's nothing to keep landlords in the market.
So if I'm inferring correctly, you're saying that the rent freeze, the general rent control and the eviction bans, if I extrapolate from your point, they are actually they are going to be counterproductive because the reduction in available rental properties will cause almost all of those things to go in the reverse way. We will see an increase in what people pay for rent rather than a decrease or straight control.
Well, no, you just see a decrease in supply. Obviously, we cannot raise rents more than 2%. And obviously, we have the eviction ban, which is in until next April. But ultimately, they are making landlords leave the market because it's not financially viable to stay in it. Capital is very mobile.
Were you surprised that it was therefore, by your estimations, low? Why would there not be more?
I thought 40% was a little bit low from the... I wouldn't be surprised if it's 50. We see it from our members and we see it from people ringing up the IPOA, constantly figuring out what's the best route to take and how to agree with the law and do it legally to actually get possession back of their property, either if they want to move into it or if they want to sell it.
Well, I mentioned in the introduction that the Society of Chartered Surveyors have described themselves concerned about the low level of housing commencement and completions. John O'Sullivan is chair of the Society's Practice and Policy Committee. John, if those concerns were already there, what do you see as the implications of this exodus of landlords from the market?
Good afternoon. Yeah, I mean, we've been seeing this for quite some time, and I would say landlords exiting it's not a new thing. We've surveyed our members, and the last quarter of 2022, 40% of sales were landlords exiting. And I think there's even other reasons for it as well. So you have people who were accidental landlords and, they rented out their property because they couldn't sell it. There were negative equity, and because values have risen, they're now in a position where they can now sell and have sold. So that's another side to it. Last year, 25,000 new housing units were built. In reality, in houses, when we sell property, our members sell property, they're selling property to owner-occupiers. They're not selling property to investors. It's just not evident in the marketplace. So it is something that's of grave concern, because there's two sides to the residential market. There's the sales side and the rental side.
But to any extent, is this the transition of the mom and pop landlord out of the market in favour of large commercial entities who may be better placed to be bulk landlords than what we have had over the last number of years? Is it a difficult period that is a necessity, in other words?
I wouldn't say that, but I think the majority of the residential rental sector is the mom and pop landlord. I mean, when you look at the figures, a great majority of those just to own one property, or it was part of their pension fund or whatever. Some might have two or three. So it's a very much a necessity in the marketplace. If you're looking at where the institutional landlords are, yes, they're very much prevalent in the market at the moment. You do wonder going forward with interest rate changes, increases worldwide, will the money be going into residential property like it was? Will the yields be there? I don't know. And I think that is something which gravely concerns us. So I would say what we should be focusing on is maintaining existing landlords in the market rather than them leaving. And
would you share Maurice's view about the factors that are catalysing those landlords' departures?
It's certainly a lot of what we're hearing, our members are hearing from those that they're acting for. I think that the complexity of the rental regulations, or how rapidly they change, our members find it difficult to keep up with the changes. I'd also say one of the other issues that's been raised is compliance with rental standards. So very often private landlords may have to invest capital in a property to keep the property to standard, and as a result, they either don't have that capital or they don't have the willingness to do it based on the low return they have. The taxation issue is a big issue. Certainly there's a different taxation issue for the private landlord as there is for the institutional landlord. So yeah, I mean, that's what we hear from our members here, from clients that they're selling property for.
What's the key differences between what applies to a private landlord and what applies to a commercial?
Well, a commercial landlord, institutional landlord, is effectively a company. I mean, they're paying corporation tax, and whereas someone who's a small private landlord, it's their income and it's income tax, and it's a stark difference when you look at it. They're paying universal social charge on it and things like that. So it is. Maurice will have all the figures on that. It's not necessarily my area, but certainly it is a big difference.
Maurice, to go back to you, the factors that both you and that John have been talking about, it is highly unlikely that any minister, that any government would row back on any or all of them by virtue of the political risk that would go with it. I mean, the eviction ban will come to a conclusion because there is a sunset clause in it. But things like rent control, things like the taxation measures, it's going to be a brave minister who starts to make those changes in favour of landlords. So what do you see as the solution, if any?
Firstly, we should be treated similarly. The REITs and the institutional investors, we both provide exactly the same service. We both put a roof over the head of tenants. And from that point of view, we should be treated in a similar sort of manner. Legitimate expenses that we spend should be allowable against tax. Every other business in Ireland has it, whereby legitimate property expenses are allowed. We also have, a lot of costs going up. We know that the RTB their price rose 267% in the last year. Our rents have gone up 2%. Management companies, insurance, tradesmen, all of the costs are going way up, but the rent is stuck at 2%, and it's not viable. It just cannot survive at that. So that is why we would be looking for that, for similarities to the rates. It's interesting, this is nothing new to the government or otherwise, because it's been really obvious. If you look in 2006, landlords borrowed 7.9 billion euros to purchase properties for rentals. And in 2021, they borrowed 143 million. So there's no new landlords coming into the market.
Although
the landlords are leaving.
The 2006 numbers were the pendulum swinging fairly significantly in the other and wrong direction. I mean, that was when the world and its mother was becoming a landlord.
That is true, but even when you look last year at 143 million, how many units is that? It might be 250 about the height of it. So from that point of view, it's way, way, way too few. I let out a place 2 months ago. I had 200 emails on it. I had 80-odd phone calls, and I met 30 people. Now, from that point of view, of the 30 I met, I had 10 absolutely wonderful tenants, potential tenants. But it's not only creating a problem for landlords, this is creating a problem for tenants, because tenants now applying for properties really have to be really, really good. They have to have all their paperwork in order and everything else if they want to be in with a chance of getting a property, because the demand is so high. And because it also limits tenants with the rent pressure zones on where they can live and work. I have a property out in Dún Laoghaire, and the tenant has got a job in Walkinstown and has to travel from Dún Laoghaire to Walkinstown. Obviously, he'd prefer to move to Walkinstown, but he can't get a property over there. So it's limiting tenants' movement. It's limiting everything by having these RPZs, and it's encouraging landlords to leave the market. And from that point of view, they really have to do something to get rid of them. I know it's very unfavourable, and I would not like to be the minister turning around and saying getting rid of it, because bringing them in was not a great idea in the first place. We've seen that in other countries. But from that point of view, I think it makes something has to change on them.
Maurice, thank you very much. That's Maurice Deverell of the Irish Property Owners Association, and before Maurice was John O'Sullivan, Chair of the Society of Chartered Surveyors Ireland's Practice and Policy Committee.